Avenue Supermarts has posted a strong set of results in December 21 quarter as business activity is normalized. Now remember, D-Mart is among the few stocks that would be less impacted, whether it's by restrictions or by lockdowns owing to rising COVID-19 cases, as we've all seen before. The company has laid out its plans to use high inflationary environment as an opportunity to sharpen its assortment and make buying more efficient, which reiterates its focus on providing value proposition to its customers. D-Mart has maintained a decent rate of store expansion even in difficult times of COVID-19, which coupled with low penetration of the organized players in the grocery sector highlights a huge runway for growth going forward. Now, we believe market weakness should be utilized to add the stock in the portfolio. Business operations normalized during Q3. D-Mart posted a strong 22% year-on-year growth in the quarter gone by. Essentials and FMCG segments witnessed a relatively better growth, while general merchandise and apparel segment growth lagged a bit. D-Mart's gross margin saw a mild dip to 15.4% owing to adverse mix, essentially which means that there was higher proportion of essential products. However, operating leverage owing to robust top-line growth led EBITDA margin improvement of 30 basis points to 9.4%. D-Mart's net profit saw 24% YOY growth. D-Mart accelerated store expansion, opening 17 new stores in Q3 FY22. This was among the highest ever quarterly store openings in the history of the company. In the first 9 months of the fiscal, the company has opened about 29 new stores, which is much higher compared to 7 stores that were opened in the corresponding period. In fact, store openings in the first 9 months of FY22 were higher than even the pre-COVID level. As of December 21, D-Mart had an overall store count of 263 with operating area of 10.3 million square feet. Currently, India is witnessing the third wave of COVID, with daily infections reaching 1.4 lakh cases in the last 2 days. The rate of infection is significantly higher than the peak of close to 1 lakh cases, which we saw in the first wave of COVID in September 2020. In order to contain the infections, various state governments are imposing restrictions such as night curfews. Also, shopping malls, market complexes are all permitted to operate only at half the capacity. With the infections increasing, more states are likely to impose further restrictions which would affect store operations. With increasing infections under the third wave and related restrictions, D-Mart store operations are likely to be affected. However, D-Mart would be relatively less impacted as witnessed earlier. If you remember, the company managed to broadly maintain revenues in FY21 in spite of COVID-19 related lockdowns. Now, about 60% of D-Mart's revenue comes in from food and grocery segment, which is essential in nature. Also, D-Mart's steady addition of new stores indicates strong growth once business normalizes. D-Mart has demonstrated a strong revenue CAGR of 28% and earnings CAGR of 39% over FY17 to FY20. It follows everyday low cost, everyday low price strategy, which aims to procure goods at competitive prices using operational and distribution efficiency and thus deliver value for money to customers, which is a key strength that the company boasts of. D-Mart follows a cluster-based expansion approach resulting in efficient operations. Its operating model is so resilient that the company has not closed a single store till date. Of course, 2 stores were converted to fulfillment centers. The share of organized players in the grocery industry is below 10%, indicating huge growth potential for players like D-Mart. If we look at the valuation, at the current market price, the stock is trading at 111x its FY23 projected earnings. Valuations clearly are at a premium, but are likely to sustain given the strong growth opportunity in the medium term and by the virtue of being the only listed company to play the domestic organized grocery theme.